the Carolina Reaper chili. It's the world's hottest chili. And I'm wearing gloves right now because all of that heat, well, it comes from these seeds right here. Now, I just came back from Beast where they held Melbourne's annual chili eating competition. And competitors had to compete eating these chip. Oh, shit. Oh, shit.
Good morning, good afternoon, good evening. No clue what time you're watching it. Don't really care. It is going on 7 p.m. over on the East Coast on Sunday. Futures have already opened. It is just coming on 7 a.m. Monday morning for me. I would like to get out to the garden before it's 95 degrees, so I'm going to keep this quick. This is OPEX week. OPEX is options expiration monthly for every single major name out there, including the indexes, where every single OPEX we are breaking records of the biggest options expiration ever. Well, there will be over $1 trillion expiring on Friday. This is a pretty big week. We have the federal budget balance later today on Monday. The 3-month and 6-month bill, and wrong one over here. Tuesday is PPI. On Wednesday is CPI. Get Japanese GDP. We'll cover that in a little bit later on Wednesday night. On Thursday is a plethora, along with Walmart earnings, retail sales, Philly Fed Business Index, Fed manufacturing, import prices, the jobless claims that we went spiking on, even though we are screaming recession, recession, recession. That's coming on Thursday. And then you get the 4-week bill auction. There is no 30-year this week. And on Friday, it is options expiration Friday. So, covering on here quickly, and unfortunately, I'll get to that in a minute as we come over here. The month of August, 447-point range already for the month of August. The high of the month coming on August 1, the low of the month coming on Monday last week, which I had you prepared for. Closing there, right below the 53.46 gap fill from a week ago Friday, to make it look as if nothing took place, which is what we wanted it to look like. We did break above 53.46 over there on Friday, and having done multiple back-to-back 70 work-hour weeks, along with Saturdays and Sundays doing one-on-one calls, yeah, being burned out is an understatement. On Friday, my point was to let 53.46 come and do its thing rather than take the risk and play the bullish calls put spreads. It worked. It worked, and that's great. Everybody's cheated on their wife or husband once. It worked. You didn't get caught. My point being, let 53.46 go and fill. And I found out today when I turned on my computer that the order that I placed there on Friday for that gap fill with the 53.45 bearish call spread got filled at $3 as it was sitting there and wound up closing full credit. So again, looking back at the hundreds and 150% and 400%, and I mean, I can't put things on spoons. And the one failure being that pre-open, pre-jobless claims, pre-Thursday, after we gapped up more than 1% and sold it all off there on Wednesday, didn't work. Made sure everybody knew that it didn't work immediately after the jobless claims report came out at 8:30 there on Thursday. So here we are going into OPEX Friday with a 447-point range, having gotten the green week that we knew that we were going to get the green week. That one as well 51.45, 51.50. Bullish put spread using the open there from Monday. Unfortunately, ended full credit for better than 150%. Work hard, work smart. QQQ, again, 4 red weeks in a row. That was taken care of and eliminated. How we had a big 25 point, 26 point week, closed green back to back Thursday, Friday. Big close above the open on Monday where the bottom came in. And we'll cover that in a little bit. And IWM, as we all know, IWM 3 green weeks in a row. Bang, 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 bang. Got your red week a week ago. This week, you got your green week, just like we expected we were going to wind up getting. So where are we? Well, that's a good question. As of right now, immediately, we are down 4 points. We're right at 53.40, and there is absolutely no reason that anything should be aggressive that happens over the course of the evening, and I'll get to that in a little bit. So come on here, and where do I want to go? I want to go directly to the charts. So SPX. This is my chart that I named Thanksgiving from a few Thanksgivings ago, and I've never renamed it. And I like the name Thanksgiving because that's when I get my 5 days off. Only get 2 holidays a year, and that's one of them. So we have our unfilled gap from over here on, as you know, and having filled our 53.46, we still have our unfilled gap up here at 53.84, going up to 53 or 54.46. And as I've explained, that being our upside target. However, looking at the structure of our bounce, 1, 2, 3, 4, got our A or our 1, don't know what it is. Nice little dip, ABC, got our B, got our 2, don't know what it is. And from this bottom here on Wednesday, with the gap up from the jobless claims going on to Thursday, that's all that we're looking at. So we'll be looking here at 2 days, right? 2 days, 5 minutes. Let's make that 3 days just so that we can get that bottom there. We've got our 1, 2, 3, just perfectly, our 4. And coming off of that 4, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 waves up. Is this our 1B, like I shared the other day? Is this the A wave? And now we're getting the B. Notice here how you virtually licked your 200 extension of your 1, 2. So this wave, call it 95% surety, is complete. It's done. It's over with. You risked your risk on Friday and you got your bump up there, and they kept you there right above that 38.2 retracement at 53.30. Right on it. So where are we?
Unbelievable. He's the whole champion. Oh, my champion. So you like
Where this pans out, again, looking at it from a wide view, like I shared, this being the 1 or the B or the A, don't know what it is, but we're looking for a drop down 52.50, 52.60. Should that fail, then 5,200 comes into play. Should that, again, looking at this from an objective point of view and considering where the dates are, should this fail, then like I shared before of that tricky whether or not this could be possibly that very hard to find wave 5, our wave 5 will come in and our wave A will be ending down there somewhere below 5,100. Still there, down to the February bottom, down to the April bottom, which are virtually just a couple of points off of each other. And that would head into our full moon being this weekend, April 19th. If not, and we only get that dip here to 52.60, then yes, moving into OPEX, moving into NVIDIA's earnings through the full moon, we should be looking for this to progress to the upside like I shared. Dip down here, 52.60, make it prove its support, bounce, dip, bounce, done, finished. Then we go into September. But we'll see. We'll see how all that works out. Looking at it from a wide point of view, and this is where I want to spend a little bit more time on, because I gave you all the warnings that I can possibly give you. Don't want to believe it, want to come at me and have me locked out of the bedroom and my dinner cold on the phone talking about conspiracy theories of, well, if that happens, then this will happen, then this will happen. Well, you know what? Believe what you want to believe. It's completely up to you. Coming off of our October 2022 bottom, that's where we're at, okay? And there's absolutely zero argument of this being a major move to the upside. Now, is it all of wave 5? That's where we come into question. This being your gaps, we filled this gap right here on Friday. We've got one gap, two gap to the upside. There might be a couple of gaps down below here. Don't know. Might be. But anyway, this is what we're looking at. And I'd have to find where my chart is that I was using on this. And I believe it is here on the webpage. And yes, it is perfectly. Coming off of that October bottom, 2022, wave 1. You can see here a rising wedge. Then you got your AB, your wave 2 bottom. Wave 2 bottom being March 2023. And from this are 1, 2, 3, 4, 5 for wave 3 to be complete. Almost perfectly to the 200 extension. Can't make this any better. Now the question being is, has wave 4, bullish wave 4, produced or producing, and then we progress up into wave 5? That is questionable. But as you can see, as I have zoomed in very, very closely here, what you have done over the course of, well, drew this a little bit wide, but what you have done here is produce yourself a very clean, very aggressive rising wedge pattern, which is due to resolve to the downside, thus bringing us back to what we're looking at here, a dip down into around 5260. Should 5260 fail, then we're looking at 5200. We'll come to that when we come to that. But this is what we're looking at from a zoomed in point of view. So again, going back to the wider point of view from COVID, 1, 2, 3, possible. 1, 2, 3, 4, this being 5, equally possible. We simply have not pulled any kind of triggers with this little dip that we've had over the past couple of weeks to start confirming anything larger than what we're already looking at. So, bring you back. These are your gaps. Sticking with all of that, I shared your video there in the alert room that was shared over the weekend from Kathy Woods. Say what you want about her. She lives a much better life than any of you do. Kathy Woods discussing the spike that took place on the VIX this week. Being up here, the yen carry forward is what it is now called, 65.73. And you see this massive aggressive sell down where we are almost filling the gap, which we created a week ago on Friday. Now, things get a little bit messed up here, so I'm going to adjust this and manually, and we're going to keep this at, well, you know what? We can just keep this at 50, 40. 40 is more than enough. There's your big spike up. Actually, you know what? I'm going to make this cleaner. I apologize for wasting your time, but that's what I'm doing. I'm going to keep that at the 30. So Again, coming off of our big 11, 11, 11, 11, but you can't get better than getting an 11. And we move here into the middle portion of July, and you start seeing that rise on the VIX as we're going into OPEX week. We continue to hold that rise on the VIX, knowing these consecutive trading sessions without a minus 2% day are accumulating, and we are starting to get something to show. And then you have your major move to the downside, and you just can't get any better than that. Your gap is to be filled over here, which we're looking at coming back over here from August 1st. That gap should fill back down to 1811. Now, using the VIX as our tool and considering this is OPEX week, seeing the VIX drop down below 1811 would give the green light to come back to what we're looking at, which is that move to the upside. Let me bring this back here to the VIX and bring us back here to what we were looking at on our chart. Again, VIX dropping down to 1811 and below 1811, and that supports our view moving up to there. Now, I'm not ready to cover the Japanese yen yet. Here's your bigger, broader picture of everything that where we're at. What I have here in gray are the election years. And these are the election years going back to when I was born in 1972. And you can go back and you can see what took place during every election year, where we peaked, where we had our dips, how things have pretty consecutively run in sequence. Well, what you have drawn here in green, what you have drawn here in yellow are the Great Depression bottom of 1933, going up to the dot-com highs. You have the Great Depression bottom going up to the 2007 financial crisis highs, which were fractionally different. Sharing it for observation purposes. As you can see here on the green and the yellow drawings, where you come to your 161.8 extension, 3274, 3209, essentially provided you with COVID. COVID fractionally higher, minus 35%. As you come here to your 261.8, either drawing, your green or your yellow, you were given 48.22 and 47.81. And where did we top? 48.18.62. And then you were provided with your 27.54% dip. And where we have come to now, as we produce there in July, is the 300 extension of both of those, having broken above 5,400. That's where we're at. Going into June, going into July, where we're at now, sitting just below that 300 extension, the market has provided you yet again with another warning. And when you go and look at a minus 50% from 56.69, you're looking at 2,500 plus 350. Bring it down right here to 2,800. There's your minus 50% level. So if you can absorb that and take the risk on that, understanding, as Kathy Woods very much clearly explained, this major change that has taken place, by all means expose yourself as you wish. But these are my lower targets for the shorter term period. 44.88, 44.89, call it, and 43.32. I do not see us in any way, shape, or form breaking down below that, even with Kamala Harris and Tim Walz. He can drink as much horse cum as he wants. It isn't going to change that. So, bring you back here to the SPX, looking at this from a wide point of view, looking here from October 2022 lows. Bring you over here to the Japanese yen, looking at the same dates, going from October 2022 down here into early portion of January. What you notice here, okay, as you had a major collapse in the yen from October 2022 coming here into the early part of 2023. That did not take place over here on the S&P. That was where you bottomed. Got your bounce, got your little bit of volatility, trying to get up off your feet up until we went up there to that 4,100. Jerome Powell. Over here in November of 2023, after you remember, we started pricing in massive rate cuts. All these rate cuts that were going to be coming in on the U.S. Big drop. Didn't have that drop over here on the S&P November. Absolutely nothing. And now, coincidentally, with the Japanese yen having made a picture perfect 1, 2, 3, 4, 5 for their wave 3, for the wave 4, with the wave 5 being right here at the 300 extension. Sorry, but that's where you're at. And with the eventual collapse or strengthening of the yen, the quote-unquote carry-forward trade is only going to get worse. However, as I shared here in the zoomed-in point of view, you've had major declines in the yen. Major declines, strengthening the yen against the dollar. And nothing from the S&P, nothing from the NASDAQ, nothing from the Russell, nothing from the Dow. And here we are, plus 62% off of the October 2022 lows. Each president, after their election, Trump and Biden, having gotten a slightly less than 35% rally from their election date until their correction. Biden, he got a 27.5% correction. Trump, he got a 20% correction. And then he got COVID. You're up 62% from the October 2022 lows. Judge it how you choose to judge it. It's your money, it's your future. But anyway, what I want to bring you back onto here is, again, CPI is going to be coming on Wednesday. CPI was better than expected back on July, and on July, what we had was exactly what we were looking at. Come on, CPI, and better than expected, fractional 2-point gap up, closed down minus 50 points, down 1% on the day, almost 1% on the day. We have now had 2 green closes in a row, and we got our green week. We got that out of the way. Monday, possible, very possible Monday, we have a green close. Possible. Likely? Couldn't tell you. Possible. We have running sell divergences on all of the futures. We are starting to get running sell divergences in a pretty big way over on the indexes. And we are coming into the full moon. Full moon being, where are you? Full moon will be taking place on August 19th. August 19th is a weekend, so call it Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday of next week, when that full moon, high or low, should be produced. Looking at where we're at and diverging from this a bit, looking at where we're at, and that sucks. I had these set up much nicer before I had my power outage. You know what? I'll cover this on another day, these charts, because I don't like the way that these look. But what I was attempting to produce is to show you how we hit our tops around August, September, and decline into October year after year after year after year. So I'll leave you with this. Everybody already knows that you should have a copy of the Elliott Wave Principle, Key to Market Behavior, written by Robert Prechter. Everybody should have this. Looking at the Japanese yen and looking at what took place with the drop and how they blamed it, I would recommend you read others of his books, this one being At the Crest of the Tidal Wave, a forecast for the Great Bear Market, written in 1997, talking about the drastic reverses that were going to be taking place during this, our time that we're in here. Another one that I would recommend that you do pick up is the socionomic, the theory of finance. And this really goes into how we're discussing here with the yen. The market was going to drop. It was going to drop no matter what. It's even worse that you have Kamala Harris and Tim Walz versus an attempted assassination on former President Trump. The yen collapse, the yen carry forward trade, it's fluff. It's smoke and mirrors. It's telling you to go look over there so you have something to blame when everything does wind up making its move. And it's going to make its move whether you like it or not. We're heading into the election period. We're heading into the full moon. So again, coming back onto the charts, this week, we should get a dip and progress higher and start embarking onto that 5450 area to fill the other gap. That's what we should wind up doing during the course of this week. Do a dip. The dip should not break below 5260. Should it break below 5260, the pressure then begins on 5200, which any failure at 5200 immediately brings you to 4950. Your February of 2024 bottom, your July or your April of 2024 bottom. Apologize for wasting anybody's time. Apologize for having been wrong one of the last 21 days. I will put in better effort. I will put in more hours. I will spend more time trying to make miracles happen.
We've been to the border.
You haven't been to the border.
And I haven't been to Europe. And I mean, I don't understand the point that you're making. Talking about the significance of the passage of time, right? The significance of the passage of time. So when you think about it, there is great significance to the passage of time.
Ukraine is a country in Europe. It exists next to another country called Russia. Russia is a bigger country. Russia is a powerful country. Russia decided to invade a smaller country called Ukraine. So basically that's wrong.
So you're now no longer are you necessarily keeping those private files in some file cabinet that's locked in the basement of the house. It's on your laptop, and it's then therefore up here in this cloud that exists above us, right?
The Caribbean nations, island nations, in the Western Hemisphere. That is where the Caribbean is. We are also in the Western Hemisphere. They are our neighbors. I am here, standing here on the northern flank, on the eastern flank, talking about what we have in terms of the eastern flank. I can imagine what can be and be unburdened by what has been, you know?
Space is exciting.
It is time for us to do what we have been doing, and that time is every day. Every day it is time for us to agree that there are things and tools that are available to us to slow this thing down. We will work together and continue to work together to address these issues, to tackle these challenges, and to work together as we continue to work.
Do you ban plastic straws?
I think we should. Yes. I mean, look, I'm going to be honest. It's really difficult to drink out of a paper straw when you had, if you're just, like, if you don't gulp it down immediately, it starts to bend.
Yes.
And then, you know, the little thing catches it. And then, you know, so we got to kind of perfect that one a little bit more.
Do you know, okay, a bit of a history lesson. Do you know that women were not, the women's teams were not allowed to have brackets until 2022?
So the United States shares a very important relationship, which is an alliance with the Republic of North Korea.
AI is kind of a fancy thing. It's, first of all, it's 2 letters. It means artificial intelligence.